A very good evening to all my dear students. Once again, I welcome each one of you for today's class on behalf of Institute of Chartered Accountants of India for the class of FEMA, that is Foreign Exchange Management Act. I hope you have been revising your studies very well and you have been doing everything. Good evening, Ankit Mishra and all those lovely students who have written wonderful wishes over here. Good evening, each one of you. I hope you have been revising and learning whatever we have done in the past and whatever chapters you have been doing lastly. Lahari Maruju, Manvi, Nanda Goel, Nancy, Hardik, Komal, Bhumika. Good evening, everyone, children. Neeru, Kasak Yadav. Thank you so much, Mahi, for such a lovely comment. Even I missed all of you a lot. Good evening, Ritika Gupta, Ragini, Tambeshwari. Welcome to the class, each one of you. So I hope you are geared up for today's session. You are all set with your notebooks, pens, pencils in hands because we're going to discuss n number of examples. We'll be marking a lot of things in the study material also. And we're going to write down different number of examples and notes as well. Good evening, Harshpreet, Anjali, Abhishek, all those who have just joined now also. Welcome to the class, all of you children. All right, good. Tambeshri says, yes, ma'am, we are ready. So that's great. That is the spirit, what is required for today's class, because the topic is very, very small. Generally from FEMA, 12 to 13 marks questions comes from CA inter syllabus. You have seen that large portion is 60 marks of it is from the Companies Act, the huge act that you have completed at least once. I request you that you should keep revising whatever you have done in the classes, because when we are doing it with the teacher presently, you feel that you have understood everything, but learning part is very, very important. As I always tell you, after every session, you must go through whatever you have done in the chapter. Then second sitting you have to do for your own learning, for your own notes. And the third revision is mandatory. And fourth is when you flip the pages just before the day of the exam. All right. So let's begin the session, and we're going to start with FEMA today. And this session is going to take for 2 classes we'll be holding, that is for today and for 3rd February. And after the session, after the topic has been completed, along with the topic, all the questions related to FEMA will also be taken as we have been doing it earlier also. So what is the meaning of FEMA? That is Foreign Exchange Management Act. Yes, I was telling you, so 60 marks of your syllabus goes from the Companies Act, and then you have these small, small acts, that is LLP, foreign companies. We have done foreign companies also. You have completed LLP also. And then we have this FEMA Act. So around 10 marks or 12 marks is consolidated for FEMA exclusively. So child, if you do these 2 lectures very carefully, you understand, you make your notes, then 12 marks out of 12, at least 10 marks are there in your pocket. You can easily get marks in FEMA, because it does seems very lengthy. It does seems very complicated, but as I always promise you that I'll try to make it as simple as possible for you so that you can learn it in the class itself. But the only mandatory thing is your homework, which has to be done by yourself. All right. So what is the meaning of FEMA? Earlier, the word FERA was used, that is Foreign Exchange Regulation Act was there, which was having a very conservative approach. They used to conserve the foreign exchange, that we are not going to give you the dollars. We are not going to. What is the meaning of Forex, first of all? Foreign exchange, when we are exchanging the currencies. So in whole of this chapter, either you will be going to China, Singapore, Thailand. So we'll be exploring different countries because we'll be exchanging currency. We'll be getting rupees. We'll be paying money in dollars, or we are giving rupee, or we're giving the dollars and we're taking an exchange for rupees. So that is your foreign exchange. Whenever you have to travel to any country outside India, if you have ever been to, say, US, can you use Indian currency rupees in USA? Tell me yes or no. Very good. No, ma'am, we cannot. So what do you use for US? What is the currency that you have to use when you travel to USA? Excellent. Ma'am, dollars is compulsory. US dollars, Ritika Gupta, very good. Because US dollars is exactly the correct thing. Because when you go to Singapore, you have to use Singapore dollars. So you have different currencies for Anjali Kashyap, Bhumika, Abhishek, all of you are correct. And when we go to Thailand, what is the currency that you're going to use? Tell me, let me see how well you are aware about the foreign currencies. Thai baht, that is the currency that you have to use over there. Yes, Pranav, good. All right. When you go to any other countries, can you name me a few more foreign currencies? Like for UK, you use pounds, euros for Europe, yen. Yeah, very good. Yes, you use yen. You have euros, you have royals, dirhams. Dirhams is for Dubai specifically. Very good. Dinars, very good. Pranav is very well aware of all the currencies. So all these Kenya shillings, very good, Lahari Maruju. Dollars, pounds, yens, all these. Yeah, very good, Tambeshwari. So all these currencies, Canadian dollar, very good, Hardik. How can we forget the Canada? Because nowadays Indians have so much hype of going to Canada, so you need Canadian dollars for that. So all these currencies that you yourself you're writing in the chat box is the answer for the definition of the word foreign currency. Yens for Japan. Very good, Ritika Gupta. So this is the definition of foreign currency. Any currency other than the Indian currency. What is the Indian currency? You know what is the Indian currency? Yes, ma'am. We every day we deal in money, paisa, rupees. So rupee is your Indian currency. Anything other than rupees is your foreign currency. So whatever examples I'll be taking in the class today, I'll be using the word dollar. Okay. So whether it is ruble in Russia, very good, Karan Kumar, whether it is yen, whether it is Canadian dollars, whether it is euros, pounds in UK, all that is one and the same thing, but we'll be specifically using the word. Ankit Mishra has also written many words. Very good, Ankit Mishra. That is correct. So whether it's the dirham, dinars, so we'll be using the currency dollars. Okay. So Rupaya in Nepal, Ritika Gupta, that you're writing, there we generally use your Indian money also. So I'll be teaching you about the exemptions about Nepal and Bhutan, where the foreign currency is prohibited. You're not allowed to take specifically go to the RBI asking for dollars for these kind of countries. Okay. Yes, Abhishek Agarwal, excellent, all of you. So everyone is geared up for the session now. You all know what is foreign currency. We have done one definition in the chat box itself. So now we will move ahead. So what is FEMA? FEMA is going to talk about the foreign currencies, exchange of the foreign currencies, various activities for which we are allowed to use the Forex, various activities for which we need the approval of central government. There will be number of transactions where RBI approval is must. Without approval of RBI, you cannot do those kind of transactions. So the aim of the act is to consolidate and amend the law relating to Forex, that is foreign exchange, that is exchanging your currencies with Indian currencies with dollars, with the object of facilitating external trade and payments. So what is external? All your imports, exports. Earlier, there were restrictions on these kind of things. But now FEMA promotes it. It says that more you send abroad, you get the currency in exchange. You can get it exchanged from the banks over here. You also export goods. They pay you money in dollars. So all these things is promoting the development and maintenance of foreign exchange market in India. All right. Now people are investing money in the shares of Indian company also. So that is how they are promoting all these kind of foreign exchanges regulated by FEMA Act 1999. So Foreign Exchange Regulation Act 1973 repealed and new Act FEMA was made, which came into effect from 1st June 2000. The objective was the dispensation of to facilitate external trade, smooth and promote development of the conduct of foreign exchange market in India. So earlier we used to have very restrictive kind of act. So many restrictions were imposed by FERA. It was the residential status was also on the citizenship it was based. But in today's lecture, you will understand a lot of liberalization has been done. A lot of relaxation has been given. The residential status also that we take under FEMA, citizenship has nothing to do with that. Okay. So the increased flow of foreign exchange is to be promoting. So government as a part of liberalization of the Indian economy in 1991, something that you have studied as a part of your civics syllabus in 9th and 10th when you have read about the Indian economy, 11th, 12th also when you read about the liberalization, free movement of foreign exchange. They promoted that all the receipts and payments and foreign investment in different sectors was encouraged. It increased the flow of foreign exchange in India and hence the reserves increased substantially. Therefore, FEMA was made. So now we have a lot of foreign exchange in our country. So in certain act was made, enacted to regulate it, to manage these foreign exchange reserves for the country. So very important line, it says, though RBI exercise the overall control over the foreign exchange and transactions, but the enforcement means how the act has to be implemented and how the act has to be made is given under the Directorate of Enforcement has been formed. A separate Directorate of Enforcement has been given the responsibility of enforcing, means applying this FEMA application of this act has to be done. All right. So who controls the foreign exchange reserve? RBI. But who is controlling the enforcement of this act? Directorate of Enforcement. So FEMA extends to all of India. Very, very important. Always section 1 and 2 tells you about the extension, applicability, and section 2 talks about the definition. So this act extends to whole of India. It's not that Jammu and Kashmir is exempted or any other countries or cities are exempted. Whole of India FEMA is applicable. After that, it applies to all the branches, offices, agencies outside India or controlled by a person resident in India. Now, this is what comes under the definition of how the act is applicable. So, if you have any branch, office, agencies which are outside India, say for example, you have opened up an office in USA with the name of A Limited. There is a company. It's not working. Okay. There is a company, A Limited, which you have opened up, has a branch office in USA. But this branch office is being controlled by Mr. Rohan, who is sitting in A Limited in India. So will you call that FEMA is applicable to this kind of branch and office? The act says yes, because it is being controlled by person resident in India. So if I am a resident in India and I am having any branch office outside India and USA, that agency will also have the application of FEMA because the control is with the Indian people. So any contravention committed outside by any person to whom this act is applied, to them also FEMA is applicable. Means if you are outside India and your control is being taken care from person resident in India, if you contravene the provisions, means FEMA is applicable to you. So if you contravene the provisions, you don't follow those kind of provisions, then a serious action can be taken against you under the FEMA rules and regulations. All right. So in this broad structure of FEMA that we're going to study in this chapter is preliminary, in which we're going to discuss the definitions. Then section 3 defines the regulation and management of foreign exchange, authorized persons, contravention penalties, how the appeals can be filed, what is the Directorate of Enforcement, and the miscellaneous topics will be taken up under this act. So in today's class, the major focus that we're going to have is Nanda Goyal is asking, ma'am, number of days for resident. I have not yet taught you about that. So let me come to the topic, then we will discuss. Okay. So today we will be largely discussing about the definitions. That is the definitions which are given under section 2. First, we will see certain part of my presentation, and after that, as I always do, I will take you to the study material so that each and every line of the study material is also clear to you, because it is a very lengthy chapter. It is not very difficult, but yes, it is little complicated because you're doing it for the very first time. So we'll try to read out each and every word which is written in the study material also. Now let's cover up the definitions. That is authorized dealer for the first definition given under section 2. So who is an authorized person? So you tell me one thing, you have your sister staying in USA and you want to send certain dollars, you want to receive certain dollars from her. So you have a sister who is staying in USA, she's earning good amount in US dollars, and few of my friends who have written about Canadian dollars, let's assume you have brother sisters who are staying in Canada and they're also earning good amount in Canadian dollars. Now you want them to send you certain dollars. Can they directly courier the dollars to you? How are they going to give it to you? Can they directly give the money to you? Law says no, you need an authorized person for exchanging this currency. Can you use dollars in India? Tell me. You cannot use dollars in India. We have rupees over here that you have to use. Okay. So you have to get the currency exchanged. So for that currency exchange, you have to go to the authorized dealer, which is largely banks in our case. So you have to give the money, the dollars will be given to the banks. Banks will give you whatever is the rate of currency at that time. Say, for example, you're traveling to Singapore. So you cannot spend rupees over there. So you need Singapore dollars. So you will go to the bank, SBI, authorized dealers who have been given the permission, who have been permitted by RBI that yes, you have that identification card, that yes, you can deal in foreign exchange, you can convert the currency. They will tell you that, ma'am, okay, they will see the rate today. The rate today is prevailing 65.67 for rupees, you'll get $1. So you will give them how many dollars you want. You want $10, you want $100, whatever amount you want. You have to pay them the money and they will give you. Suppose you have given them rupees 33,000, they will give you $500 in exchange of that, considering the rate. Now, if you go and spend money over there, whatever balance money dollars are left with you, you cannot keep them to yourself. You have to go and get it exchanged from the bank. You kept it to yourself. Maybe you have saved $2-3. You want to keep it as a currency, as a hobby. That's fine. But you cannot use it in India because here we have to use our own rupees money. So authorized dealers are those who help you to exchange the money. So number one authorized dealer is the banks. Then there are money changers. Money changers are the people who are generally sitting at the airport. Yes, no, you cannot simply transfer the money, Lahari Morojo. Yes, you have to transfer the money through banks only. So where will you get the money? The transfer will happen in your account only. So bank comes into picture. Online medium also you can use, but whatever medium you're using, you have to do the transactions through the authorized dealer, that is the banks. Then the money changer. Money changer are the people who are sitting in the airport. Suppose you forgot to carry your dollars with you and now you're traveling and you have rupees in hand or you have your debit cards. You can get your money exchanged from the money changers over there at airports. Offshore banking units is again your SBI banking units that you have. SBI has set up their units outside India. You can go and apply to them and take help from them and you can get your currency exchange over there. Or any other person who has been authorized under Section 10, subsection 1 to deal in foreign exchange or foreign security. So any other person who has been given by the permission and license has been given by RBI, that yes, you have money changing machines also. Very good, Abhishek Agarwal. That is also available. But then again, it is an authorized dealer only who can deal in such kind of transactions. You cannot on your own pay dollars to others and you receive dollars. This cannot happen. You have to have an authorized person. Section 3 also tells you about this only, the regulation and management of foreign exchange when we'll study. The first line over there which is written is that no person can deal in foreign exchange unless otherwise through an authorized person. So that is why the first definition that we have to do is authorized person. Examiner can ask you this definition for 2 marks or 3 marks. You have to learn it. So who are the 4 people in the authorized person? Number 1, authorized dealer, that is the banks. Money changers, people those who you see at the airport who help you in foreign exchange. Any offshore banking unit, I told you SBI has their units abroad, that they are known as offshore banking units. And any other person who has been given the license to deal in foreign exchange or foreign securities. All right. What is foreign currency? Any currency other than rupees. So you have already told me all those foreign currencies, yens, dollars, dirhams, dinars, Canadian dollars, US dollars, Singapore dollars, Thai baht. All those are foreign currency. What is the meaning of foreign exchange now? A foreign exchange means foreign currency. So foreign exchange ka matlab hi it is foreign currency. Wherever the currency which is other than Indian rupees is involved, that is foreign exchange. But it includes certain other things also. So one definition important is authorized person. We have to remember 4 things over here. We have already learned. Foreign currency, you have already understood. Now in foreign exchange also, you have to do 3 to 4 points, which you have to learn by heart. Number 1, it is foreign currency. It includes deposits, credits, and balance payable in any foreign currency. So if you have taken up deposits in dollars, you have set up dollars in any another country, you have given any money. So that money, which is your money, which is lying in outside bank, it is again in dollars or any other currency. That money is known as deposit because foreign exchange is included over there. Okay. So any deposit, credit or balance payable in foreign currency. We will also do certain examples of each one of them. But first, let's understand what is written. So drafts, traveler's checks, letter of credits, any bills of exchange which have been drawn in Indian currency. So you have to make a payment and you have to make a payment to Mr. John who is in US and you have drawn a bill of exchange in his favor which is in rupees 100. Which is rupees say 10,000. Okay. And this money is to be payable to John in US in dollars. So here the bill, although has been drawn in rupees, but the money has to be payable in dollars. Then also the foreign exchange is involved. Do you understand? Because he did the purchases over here. The money was to be, the bill was raised in his name, invoice was made in rupees, but the payment has to be made in dollars. Foreign currency is involved. So foreign exchange, it comes under the definition of foreign exchange. Similarly, the draft stamp. What is the meaning of traveler's check? Earlier, when you had to travel, so now if you travel to any countries abroad, you simply get the international credit cards from the banks. Have you seen? Any one of you or your parents might have used it. If they have to travel to any other countries, you get the international credit cards from the banks, and you can go and swap those credit cards, and the balance get accumulated, and you pay at later to the credit of the banks. But earlier, travelers' checks, letters of credit, these kind of travelers' check was to be taken. Say, for example, if I'm going to US, I had to go to the bank and I had to take a traveler. I have to give them 5 lakh rupees, and they give me the traveler's check of 5 lakh rupees. That traveler's check I can use for making the payments. Like now I get an international credit card. Earlier, there was a limit set for the traveler's check. They used to get the checks from the banks, and we can use that for making the payments in US, UK, China, wherever you're traveling. Whatever purchases you made over there, you used to use that traveler's check or the letter of credit or bills of exchange, that whatever we have received from the bank for making the payment. So if it is drawn in rupees, it is payable in dollars, then also it is foreign exchange. If it is drawn outside India, that is in foreign currency. So if I have drawn a bill which is in foreign currency, that is in dollars, and I'm making the payment in rupees, then also it is foreign exchange. So please write down any bill of exchange in simpler language. You will write down for point number 2 and 3. Any bill of exchange or letter of credit or traveler's check drawn in rupees, payable in dollars is Forex. What is the meaning of Forex? Foreign exchange, short form for foreign exchange. Any bill of exchange, letter of credit, traveler's check drawn in Indian rupees. Oh, sorry, we have already done drawn in Indian rupees, drawn in dollars and payable in rupees is also Forex. Please write down this thing. And what is the meaning of the first one? Deposits. Let's write down for deposits also. I will dictate you. Please write down what will come under deposits. For example, Mohan in India has sent 50 lakh rupees in USA, which will be converted into dollars, and deposited in outside bank. This deposit is also covered under the definition of foreign exchange, because any deposit with foreign bank is foreign exchange. Any deposits with foreign bank or any credits, any balance which you have to pay. So whatever you have deposited, whatever dollars have been traded over there, that balance payable will be the foreign exchange. Is that clear? So whatever money that you have deposited in the bank account outside India, you have sent the rupees from here, they have converted into dollars, they have deposited for you in the banks, it becomes your foreign exchange. Now, whosoever is dealing in this foreign exchange is known as the, tell me in the chat box, whosoever is dealing in this foreign exchange or foreign security will be known as authorized person. Whosoever, how you convert this money, how you make the bill payment, how the currency has to be converted and used, that is to be done through the authorized person. Is that clear, everyone? No one goes for changing foreign currency. Yes, yes, yes. Hardik, that's absolutely correct. Nowadays, people simply pay it through the international credit card, so don't get the currency exchange. But yes, still there are people who follow this traditional methods. Like if I have to travel, I still go to the banks and I get the currency exchange so that you have that freedom in the mind. You know how much you're spending. But people like you, they love to do it through the credits. You're building your credits, and it's okay that you can do that way also. So it's absolutely fine, whichever way you're comfortable in doing it. All right. Okay. Yes, yes, you can do like that also. That is correct. Your understanding is correct, Hardik, what you have asked. All right. So authorized person definition, we have to learn 4 points. And foreign exchange definition, we have learned 3 points. How we have to learn deposit credits payable in foreign currency, drafts, travelers check, TC, LOC, BOE in rupees, paid in dollars. Drafts, TC, LOC, BOE drawn in dollars, payable in rupees. Okay. Now let's move to the definition of foreign security. What is the meaning of foreign security? Can anyone tell me what is the meaning of security? No, you will not do like that, Abhishek Agarwal. In exam, you have to write foreign exchange only. Because in the entire chapter, they have used the word foreign exchange complete. Okay. Here, because we will be referring it repetitively, that's why we are writing. There, you only have to write 1 or 2 answers. So security means any shares, stocks, bonds. Am I correct? All the shares, stocks, bonds. So in India, if you have invested 100 rupees in Reliance, so is that foreign security? Tell me. If you have invested and taken up the shares of rupees 100 in Reliance and you get a dividend of 1 rupee each, so what is that? Indian security or a foreign security? That is 100% Indian security. You're investing in Indian company and in Indian rupees, and the return that you're getting is also in Indian currency. Then it is definitely an Indian security. So any shares, debentures, stock, very good. Excellent. All of you have written correct. Any shares, stocks, debentures, stocks, shares, debentures, or any other instrument denominated in foreign currency. Now, if we use this currency, which is denominated in dollars, or for the sake of bonds, if we are using this currency, but where the redemption, but the return that you get is in the form of rupees. The return that you're getting is in the form of rupees, then foreign exchange is involved. So it is a foreign security. So where you simply drawing the bill and payable in rupees, that is foreign exchange. But foreign security, where the word security, that is shares, stocks, bonds, debentures come, they are denominated. For example, if you have invested in a company in USA and you have invested, taken up shares in $10,000 you have invested, and you're getting the dividend in India in rupees 100. So if you're getting the dividend, if you have invested in Indian currency, denominated in Indian currency, you get the dividend in foreign currency, then also it is foreign security. If you have invested in foreign security, you get the dividend or redemption in the return of rupees, then also it is a foreign security. Say, for example, you have taken the Netflix stock of $200 and you get a dividend of $2. So here the dividend return is in foreign currency. So it becomes your foreign security. Okay. So even if in the Indian company outside and outside India, abroad, you have invested the money, you're getting the dividends in another currency, then also it is a foreign security. But if it is, examiner will ask you this question. You have taken up the shares in Reliance for rupees 100, you're getting a dividend of 1. MCQ, is it a foreign security or not? FEMA will be applicable or not? They will write big lines about that. So you will simply choose the correct one. FEMA is not applicable because it is Indian security. FEMA is applicable to the foreign security. But if any denomination in the foreign currency and you're getting an Indian currency rupees, then yes, you will get the FEMA applicable. All right. Yes, everyone has given the correct answers also along with that. So wonderful. Good. After that, we move to the most important definition of this chapter, that is capital account transactions and the current account transactions. Till here, everyone is clear. So now whosoever is dealing in this foreign security, now if you'll go to the back to the definition, let's go back to this definition also. If you go back to the definition of authorized person, so they have clearly written whosoever deals in foreign exchange and foreign security is the authorized person. So we have done the definition of foreign exchange also. We have done the definition of foreign security also. So examiner can ask you, that foreign security, please write down this line. And the person who can deal in foreign security, after you have written the definitions, you will write, and the person who deals in foreign security and foreign exchange is known as the authorized person. And the person who deals in this foreign exchange, Nanda Goyal, then it is if you have invested money outside India, if you have from India, say for example, if you have taken the shares of Netflix and you're getting the dividend in foreign currency from India, if you're investing, then it is a foreign security. But you are a resident of outside country only, you have nothing to do with India, you are taking up shares in your own country, then it is not a foreign country for you. So the exchange has to be involved. The foreign currency return has to be involved, then only it will become a foreign security. Okay. If the dividend is in the foreign currency, then it is for sure your foreign security is considered. All right. So any person who deals with foreign exchange and foreign security will be known as authorized person. Yes, Nanda Goyal, then it becomes foreign security. That's correct. So capital account transactions. Let's move to this capital account transactions definition now. Any transaction which alters. What is the meaning of alters? Alters means changes. Please write down. Alters means changes. So any transaction due to which your asset or liability, including contingent liability, is changing outside India of a person who is resident in India. Okay, very interesting. So you are a person who is resident in India. Ma'am, what is this PRIR? We have not yet done it, but we are just understanding what is a capital account transaction. There is a person, you understand, resident in India means something to do with his residential status, but what is his residential status? That I have not told you right now. Kasak is asking if a person from outside India invests in foreign security in India. Yes, FEMA will be applicable because you're receiving the return is in Indian rupees. You have invested in dollars, but whenever you're taking up security in India, it will be in rupees and the foreign currency is being involved. So FEMA becomes applicable. Okay, foreign security will be involved. If there is a denomination in foreign currency, that is what is involved. One denomination is expressed in foreign currency and the redemption or return you're getting in Indian currency, exchange of currencies is being involved, it becomes your foreign security. Okay, so any transaction which changes your assets and liabilities. So if you're a PRRI and you have taken up any assets, say for example, you have purchased asset or a house in Dubai. So that means any asset is created outside India. Am I right? Yes, ma'am. We are purchasing house in Dubai. Wow. So asset is created outside India. This is known as a capital account transaction. And you said you will make payment for this asset in next 5 years installment. So what is created? Liability is created outside India. So whenever any asset is created outside India or liability is created, including contingent liability. So when we speak about person resident in India, even when his contingent liability is created outside India, it is known as a capital account transaction. Is that right, children? And any person resident outside India, if he buys any assets in India or he creates any liability in India, then it is known as capital account transaction for him. So wherever any capital asset is coming into picture, wherever any liability is coming into picture, you didn't tell me how spelling is wrong. Wherever any asset, so our foreigner, Mr. John, he has purchased a house in India, so his capital asset has been created. So it is a capital account transaction. You're a person resident outside India who is residing outside India. He has purchased a house in India. It becomes his asset or liabilities created outside in India. Then you become then it becomes a capital account transaction. assets or liabilities created in India. So seems simple, but becomes complicated when we do examples. But as of now, it is very simple. You are a person resident in India, you are buying house, you are having liability outside India, capital account transaction. Your friend, Mr. John from USA, he buys the house in India or he creates a liability in India, capital account transaction for him. And this capital account transactions are covered under FEMA. FEMA is applicable to them. And now what is current account transactions? So they try to simplify it that if you have understood what is capital account transaction, my dear friends, any transaction other than capital account transaction will become a current account transaction. Simple. So you don't have to apply your mind. Whatever else you do, that is a current account transaction where no asset liability is involved. So if no asset liability is involved, if no balance sheet item is involved, then you go to the P&L items. Whatever expenditures and revenues that you're earning will be coming under the purview of current account transactions. So what you have to do is, it seems very simple, but it is the most complicated part of this chapter, that is current account transactions. You have to learn these 4 points. Examiner has recently asked, if you see the question paper that has just come up in January, this was the straightforward question, define current account transactions under FEMA. So my dear friends, you will not simply write that other than a capital account transactions means the transaction is a current account transaction. You will write this line and you will say, without prejudice to the generality of the foregoing transaction, it includes the following. You have to write this line in the exam if definition is coming. You have to learn these definitions by heart. We are understanding them in the class, but learning part I'm leaving on you. You have to do it. So transaction other than a capital account transaction is current account transaction, and without prejudice to the generality means without affecting it, it becomes a very general statement now. In when you were small, you used to learn like all these odds and evens. So if you leave odd one out like you used to do, so table, chair, furniture, food. So food is odd one out, right? It becomes very simple to locate it. So, but it is though simple. Anything outside the capital account transaction is current account transaction. But we have to remember that it includes these 4 transactions. What are these transactions? Number 1, any payment due in connection with foreign trade, other current balances, business services, short-term banking credit facilities in the ordinary course of business. So whatever payments you are making, whatever payments you are receiving as a business person. So where you purchased a machinery abroad, asset was created, but if that machinery you are purchasing for the purpose of business, you have got that machinery back in India, no asset is being created outside. Are you understanding? For any expenditure that you're doing, we'll be taking up this example from the study material. Any purchase or any payment that you are making or any short-term banking credit facility. So you create a liability, you become a capital asset creation. But where only short-term banking, 2 months, 3 months loan you're taking outside India, that is in the ordinary course of business, that will come under the purview of current account transactions. Any interest that you're paying on the loans or income that you're getting from the investments, that is your current account transactions. Your parents, spouse, children who are staying in USA, you are giving them the living expenses. Say, for example, you children after doing CA, you go to abroad, you go to Australia for doing CPA, or you go to US or UK for doing ECA for the studies. Now you're residing outside India, your parents are sending you certain money. So that money that they're sending for you for your living expenditure, that is your current account transactions. Or your parents are staying abroad, you're sending them money, living expenditures means for their food, shelter, clothing, whatever money that you're sending for people residing abroad, your relatives residing abroad, that is for your current account transaction. That is not cap because no capital asset is being created. Any expenses in connection with foreign travel. So you want to go and travel to Europe, Italy, France, Spain. So that is your current account transaction. You want to go for the education, your current account transaction. You want to go for the medical care of your parents or your spouse and children. All that will come under the purview of current account transactions. Thank you so much, Mahi. I'm so happy to read this beautiful comment that you have written, and I am also really happy. I enjoy teaching all of you. In between this just chat box pop up, Thank you, Mahi. Thank you so much, children. And I hope others are also understanding and enjoying the session well. Okay. So when you do a transaction, so current account transaction, you have to remember that any transaction other than capital account transaction is a current account transaction, and it includes four things. What are those four things? Any living expenditures paying for abroad for parents, spouse, children residing abroad, medical expenditures, foreign travel, education, medical care abroad, any connection of the foreign trade for the ordinary course of business, whatever you pay, and the interest on loans and income from the investments, whatever you're getting, will be a part of current account transactions. Okay. Yes, Hardik, for the first point, we will be doing certain examples which will make it more clarifying. Okay. So any connection with the foreign trade. So if I have purchased any machinery for the purpose of my business, and it will be said that we have created an asset outside India. I went to USA, I purchased that machinery. But now I have bought back that machinery to my hometown because I want to use it in the business. So I have done the foreign trade. I have done the business. I have purchased the asset. I have also done the short-term banking. I said, I will pay you the liability in 2 months. Liability is created, but it is in the ordinary course of business. Therefore, it becomes a current account transaction. Is that clear? All right. Okay. Now I am going to open your study material also. Please quickly go through these definitions. Go through these definitions once, and I'll just open your study material. And then we will be doing these definitions of person and person resident in India also. Okay, let me just open the study material for all of you. All right, so this is your chapter broadly covering the current account and capital account transactions. And then we have discussed all these points. I told you earlier it was FERA in 1947, and now it has been replaced by FEMA. It has more liberalization. FERA has more restrictive kind of act. So regulation of transactions between resident and non-resident is basically being allowed. Investments in India by non-residents. So we are going and making investments in USA, or people from outside are buying houses in India. That is your foreign exchange. Freely permissible current account subject to reasonable restrictions. So whole of this chapter involved around restrictions only. So it will say whatever current account transactions I just told you, they are freely permissible. Yes, you can do in the ordinary course of business. You can use this foreign exchange, but there are certain restrictions which either central government will be imposing or RBI is going to impose. So see, RBI and CG control the capital account transactions. Exports proceeds, whatever money that you get and repatriate to India. Dealing in foreign exchange is always done through the authorized persons. Who are the authorized person? Can you write those 4 points for me? Authorized dealer, money changer, offshore banking unit, and any other person who has been given the license under section 10 subsection 1 to deal in foreign exchange and foreign security. Students, at the admin query also, I hope you're understanding everything is clear to you. Ankit Mishra. Mr. Amar Yadav. Okay, thank you so much, Amar Yadav. You got the question of current. Yes, I know that you got this question of current account transactions and foreign in this exam also. Good. Narsima. Okay, Narsima, your answers are also correct. I hope you have written down what we have done earlier. Now it's clear. And thank you, Mr. Amar Yadav, for writing such a beautiful comment. Thank you so much, child. I feel blessed when I meet all of you and reading all these wonderful comments that you keep giving. And I'm glad that you enjoyed the session. Yes, Dilip, that's correct. Authorized dealer's definition. Manvi, that's correct. What about others? Nancy Hingu, that's correct. Nanda Goel, good. All of you have written correct. Riddhi is asking about the directorate enforcement. I will just explain you in a while. Okay, dealing in the foreign exchange. So with this done, then again, what is the meaning of compounding of offenses? So earlier in FERA, the compounding of offenses was not allowed. You must have read it when we did long back Contract Act and Foundation. When we were doing Companies Act, started with it. Compounding of offense means under FERA, if you had certain penalty to be paid and imprisonment, that is that you have to go to the jail, then it was very restrictive that you have to go to the jail. But here, compounding of offense is allowed. That, for example, one said that, okay, 1 lakh is the amount of penalty and 2 years jail. So the person said, I'm ready to pay 5 lakh rupees, but don't send me to the jail. So you're compounding the offense. You're allowing that jail will be, you will be permitted that you will not be going to the jail, but for this offense, then you have to pay the larger amount of money. So that is allowed in FEMA. That was not in FERA. Investigation can be done by Directorate of Enforcement. So for the FEMA, Directorate Enforcement, like we have a central government who is enforcing and putting the restrictions, RBI is controlling for FEMA. So a separate body has been. So you don't have to, nobody is going to ask you who is a Directorate of Enforcement in the exam. But yes, for this enforcement of FEMA, a separate body is there, that is Directorate of Enforcement, like a director, that is a person, a body which is regulating whatever has to be done under FEMA, how the rules and regulations have to be made, and how the application of the act has to be done. An appeal can be filed to the Special Director Appeals and Appellate Tribunal. When you go through the income tax, you will understand we have Income Tax Appellate Tribunal. Similarly, for the law also we have National Law Tribunal, and for FEMA you have particularly Appeals and Appellate Tribunal where you can file your cases for FEMA. All right. So this preamble, extent and application we have already done. Authorized person we have done. We were just coming to the current account transactions. So this is the definition of current account transactions. What is the meaning of export? Taking anything outside India. If you're sending the money outside India, that means you're exporting the goods outside India and you receive money in exchange of that, or you're providing services from India to any person outside India. Foreign exchange, foreign security. This definition is important. You must learn it. If current account has come, they can ask for foreign exchange and foreign security this time. Okay, so we will be coming to the definition of person. I was just finding the examples for the current account transactions for all of you. So maybe you can write down certain examples. If any machinery is purchased in USA and the money is paid in cash, what kind of transaction is that? Please write it down. I'm doing certain examples with all of you. If you have purchased machinery outside India, asset purchased in USA and paid in cash, is it a capital account transaction or a current account transaction? Very good. It's a capital account transaction. Excellent. And if the same machinery is brought to India, if the same machinery, if the asset or machinery is brought back to India, then do you have any asset abroad? No. Then this is current account transaction. Okay. Okay. Another question, another example you can write down. Asset purchased in Dubai. Payment was to be made in 10 months installment. Payment was to be made in 10 months installment. However, the asset was bought back to India. However, the asset was bought back to India. Tell me, it is a current or capital account transaction? Everyone said current account transaction. Liability is not created. Abhishek Agarwal is only one who has given the correct answer. Lahari Moruju, correct answer. Ragini, correct answer. You're a person resident in India. You're buying house outside India, or you're buying machinery outside India, but you have not paid the liability, my dear. You have to pay them $1 lakh. You said that I will make the payment in 10 months. So liability is created outside India. Very good, Vijaya Kar. Vijaya Kar. Very nice. Good. First time I've read your answer, Mr. Pijia. Okay. So liability is being created. That's why it becomes a capital account transaction. In the same example, you will write down, in the same example, if the credit period was not for 10 months, it was only 2 months. In the same example, if the credit period was not 10 months, it was only 2 months. Then it will be a very good current account transaction. No, not capital now, Vijaya. Please write down. First, you complete. If the credit period was not 10 months, it was only 2 months, then it will be a current account transaction because the short-term loan or borrowing, comes under the preview of, I hope you all are writing now, because the short-term loans or borrowing comes under the preview of current account transactions. Okay, another one. If you have taken a loan from outside India, what will be it? I have taken a loan from outside India. That will be a capital account transaction because my liability is created outside India. But the interest that I pay on this loan, interest paid on the loan. Yes, Nanda Goyal, if you go in that preview, then you can explain this example with writing this assumption of 10 months of a short-term loan. But this was just to explain you that difference between the short-term 10 months we have taken for the longer period and 2 months we take for the shorter period. Okay, if you write that assumption and you say that in the exam that we are assuming that it is a short-term, then also your answer will be correct. An excellent answer given for this interest on loan. Absolutely correct. It is your current account transactions. Interest on loans as well as the interest paid as well as the income on the investment is also your, tell me, income on the investment is also current account transaction. Very good, very good, very good. Any foreign travel expenditures, medical expenditures that I'm paying? The loan wala example Mahi is asking. So if you're taking any loan outside India, then it is capital account because liability is created. But if you're paying the interest on this loan, then it is a current account transaction. Okay, those who have missed that one. All right, now let's take a small break because we're going to do a very huge and wild definition of person resident in India. So let's take a small break. I want you to absorb whatever we have done as of now, and then we will discuss the chapter further. Let's take a small break here. If loan interest is of short term, then yes, then also it is a current account transaction. Correct, Lahari? Yes, 1 hour has gone, Nanda. I think we should take a break now. Good. Okay, let's take a small break. Welcome back to the class, students. So, Hardik has written it out for us. A person who is resident outside India and owns a branch office in India. So, person who is resident outside India and he is having a branch office in India, yes, FEMA is applicable to them also. This is something which we're going to cover right now in the definition of person. But the second doubt that he has raised is purchasing a foreign security in Indian rupees and getting a dividend in foreign currency. Yes, FEMA is applicable. So please understand, children, for the foreign security, the denomination has to be in the foreign currency. So if you are buying, I told you where we started, I bought Reliance shares, I'm getting dividend in rupees, it's an Indian security. But I purchased shares of Tata Motors in abroad, or maybe Infosys, which is having its office in abroad. I purchased the shares of Infosys, which is listed in outside country. So I have spent $500. I get dividend in dollars. Yes, it is a foreign security. I invested in a company which is outside India, Microsoft, in $500, but I get a dividend in Indian rupees. Then also it is a foreign security. What is important is that denominated in the foreign currency, then yes, it is a foreign security. Also includes where the redemption is in Indian rupees. So even though you're getting in dividends, then yes, it is a foreign security. Even if you get in Indian rupees and you have invested in dollars, then also it is a foreign security. I hope everybody is now crystal clear about foreign security, right? Any other doubts? Anyone wants to ask anything further, because we will be now proceeding ahead, okay? All right, let's move to the definition of person. Person is any individual. HUF is a Hindu undivided family, a company, firm, or an association of person incorporated or not, body of individuals, artificial judicial person, or any agency, branch, or office controlled by such person. So here they are telling you a broader definition about who is a person. Who is a person? Any individual, firm, HUF, company. So whatever we have been understanding in the definition of person, like when we do under income tax also, most of you who are giving group 1, you have been studying for income tax, advanced accounts and law, all these subjects. So under income tax also, you have seen the definition of person. Similar kind of definition is given for the person over here also. But here it includes any branch, office, agency is also defined as a person. Because when I do the definition of person resident in India, there we will be using these people of office, branch, or agency. So means it is a person which is covered under the definition of person. When we are saying any company, any association of person, any body of individuals, they all are covered under the meaning of person. Any artificial judicial person is a company. Any agency, office, branch owned or controlled by such person is also known as person. So person's definition is very, very simple. You have been doing similar kind of definitions under income tax also. What is important is a person resident in India. So let's start with the definition of person resident in India. So if you go as per the residential status of income tax, you will have to forget it over here, because FEMA has its own beautiful residential status. This residential status is not for the year, it is for the period. We have to see the residential status according to the terms and conditions that I'm going to teach you. It will not be for the full year, it will be for certain period. So you don't have to bring into the mind the residential status of income tax. That has to be kept outside. And with a new set of mind, you have to understand who is a person resident in India. We call him PRII, that is person resident in India. There you have the words resident, non-resident, ordinary resident, not ordinary resident. That is totally different story. Under FEMA, we have PRII and PROI. So who is a PRII? Number one, the person who is residing for more than 182 days. Underline this word and write it beautifully with colored pens in your notebooks. We have to see the residential status, number one, of the previous financial year, and it should be more than 182 days. Then only you become a person resident in India. So the first point, what is the first point? The first point is that you have to see the residential status of previous financial year. And the second point is it has to be more than 182 days. So if I tell you Mr. John stayed in India for 82 days in previous year 23-24, can we say he is a PRII? Yes or no? If he has stayed in India in the previous year for 182 days, he is not a PRII. Okay? Because you don't know what do we call them. So who is not PRII is known as PROI, person resident outside India. So he is not PRII. Why? Because exact 182 days out. You're not PRI. More than 182 days. It has to be more than 182 days. Yes, and we have to see previous year. Very good, Lahari Moruchu. For this year, he stayed in India for 365 days. But previous year, he stayed in India for 182 days. Then he is not a PRI. Number one, we have to see the number of days for the previous year. And number two, more than 182 days, then you become the PRI. Clear? Till here, it is clear. Okay. Now the major story starts. Point number 3, but does not include. What is not included means, if you say not include means, then you are a PROI. If you are not, does not include means you're not part of PRII, then what are you? Then you're a PROI. PROI means person resident outside India. So for being person resident in India, previous year, more than 182 days, fine. Only 182 days or less than 182 days, I am PRO. Now, does not include a person who has gone out of India or who stays outside India for taking up employment outside India, for any business or vocation. Vocation is also kind of a profession. I am a chartered accountant. I have taken up my CA profession in US. Yes, Manvi, if 182 days, then not PRR. Absolutely correct. Okay. Vocation, yes, Nanda Goel, kind of a tour or business, not tour. It is for the profession that you're going for, either for running any business or profession. You're going outside India, or you just went outside India for an uncertain period. Means you got married, you have your spouses residing over there. Now you're going abroad, but you don't know for how long you'll be staying. So there is an uncertain period. So if although you stayed for more than 182 days, but now you are going out of India, either for, we will call these 3 specified reasons. What are we going to call them? If you're going outside India for 3 specified reasons, you're going outside India, then you become for employment, business or vocation or for uncertain period, then my dear children, what will you become? If you go outside India for these 3 reasons, you become PROI. Why? Because PRI is saying, no, I do not include. So if it is not including, that means it becomes PROI. We are trying to simplify the things. Everybody is with me on the same page? Right. More than 182 days, PRI. Equal to or less than 182 days, PRO. Previous year status to be seen? Yes, ma'am. Going out for 3 things, business or vocation, employment, uncertain period, you become a PROI from that. A person who has come to India or stays in India otherwise than for these 3. Now, this is interesting. Now, I'm going to tell you, I'm coming to India for these 3 things. If I'm coming to India not for these 3 things, otherwise then for means, other than these 3 things, if I'm coming, then I'm not a PRI. Then what am I? I am a PROI. Now, I am a person who is residing in USA. I come to India for taking up employment in India, or I want to do business or vocation in India, or I want to stay in India for uncertain period. When I come to India for any of these reasons, I become PRII. When I come to India for any of these three reasons, I become PRII. When I go out of India for any of these three reasons, I become PROI. So what I have to remember is 182 days important. Going out of India, PROI for these three reasons. Coming to India for three reasons, PRI. Anything reverse of that will be the reverse of PRII, PRO. So I am in India for more than 182 days. Tell me, children, what am I? Chat box is on for you. I stayed in India for more than 182 days in previous year. I am a everyone. Absolutely correct. I am PRII. Absolutely correct. I stayed in India in the previous year for 180 days. In the current year, I stay in India for 365 days. Who am I? PRI or PRO? Very good. What about others? Everybody is not answering. What happened? If I have gone, okay, now first of all, PRII, you have to learn to write. That is person resident in India. P person resident, I in India. Okay. So PROI is person resident outside. And somebody is writing PRIO, person resident in India, PRII, short form. And PROI means if I'm not PRII, I'm always a PROI. Okay. So if now listen again to the question. I stayed in India for 180 days in the previous year, but in the current year, I am here in India for 365 days. Then I am PRII or I am PROI. Kasak Yadav, 180 days, I said. So absolutely correct, others, everyone. It's PROI, that is person resident outside India because of less than 182 days in previous year. Absolutely correct. Now, I have stayed in India for 186 days in the previous year. Who am I? PRI. Okay, hold on. You are correct. In the same example, today, what is the date today? 29th January 2024, I decide to go to Singapore for taking up employment outside India. From today, I will become a Tambeshwari, Hardik, Nanda Goyal, Ritika Gupta, Abhishek, Riddhi Kasak. Everybody has given the correct answer. Mahi, very good. I become person resident outside India. If I am a PRI, I'm going outside India, not for employment, not for business and vocation, but for staying for uncertain period. Then also I become a PROI. Absolutely correct. Everybody is clear. So first limb is clear to you. Point number A, everybody is now clear about that. Let's do the second limb, that is B part. You have never come to India. You're a foreign citizen. For the very first time, you're coming to India on 1st April 2024. And you're going to take up employment in India. If such kind of question will come, you will not apply your mind at all. You are coming to India, no 182 days, nothing to be seen. Simply you're coming to India for three things. You can see my blue circle on the screen. You become your PRII. Absolutely correct. If you have come to India for business or vocation, you become PRII. If you have come for any uncertain period, then also you become PRII. But if you have come to India, neither Nanda Goyal, PROI means person resident outside India. So if I'm not a person resident in India, I will be a person resident outside. Okay. Inside India is PRII, outside India is PR. So if I have never come to India, I'm coming to India for the first time, but I'm not coming for any of these three reasons. Then you will have to see the previous year. Nanda Goyal, you want to speak something? You want to ask your question? You have a doubt? Anyone has any doubt? You can talk to me. You can speak also. You can raise your hands. All right. So where were we? So you have always been staying outside India. You was a PROI because you have never come to India. So less than 182 days in the previous year, you were a PROI. Now you have come to India for none of these reasons, neither for business nor for just for the traveling. You will be a carry forward of the status, means you will remain a PROI. Yes, yes, yes. Otherwise, then for three purpose, then no, 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 Mahi. If you have come for these three purpose, then you become PRII. If you have not come for these three purpose, then you go to the green sketch that I've written. Other than these three purpose, then you remain PROI. Yes, Hardik, then you will see the previous year status. Okay, it will become much more clearer with the examples. Let's do the examples. Please write down the examples. Mr. A never came to India. Mr. A never came to India, but comes to India for the first time. Mr. A never came to India, but comes to India for the first time in the previous year 23-24. In the previous year 23-24, for doing job in India. For doing job in India. What will be his residential status? Very good. So please write down. You have written correct PRI, but please write down in your notes. Then from that particular date, please write down. Then from that particular date, he will become person resident in India. He will become person resident in India, even if he wasn't in India, in previous year for more than 182 days. मतलब वो नहीं भी था 182 days के लिए, then also he will become PRI. Why? Because he has come to India for one of the three reasons. Because he has come to India for one of the three reasons. Please write down one more point. Mark an asterisk in your notes and write down. Under FEMA, residential status is not for the year. Residential status is not for the year. It is for the period. It is for the period. Okay, next example. You want to do more examples? Let's assume Mr. A stayed in India for 365 days in the previous year. Then he's a simple. That was so simple. Why did you take time, everyone? Yes, then he's a simply PRI. So exact 182 days we have already done. So if you have stayed in India for the period, means from that time period, Nanda Goel, means you will not say the residential status like an income tax. You say for the year 23-24 you're a resident. No, for that period, if you have went outside India on 1st April, then you become PROI on that day. If you were in India on 24th June, you're going outside India. From that date, your residential status will change. Okay, it's not for the full year. All right. So you stayed in India for exact 182 days in the previous year. So you are a PRO. But the current year, you are staying for 365 days. So examiner will ask you for the 2 years residency status. So for the current year, you will be a PROI. But for the next year, you will become the PRII. Okay. Because now you are staying for the 365. Is everybody clear about this? Because the previous year has to be seen. That is the thumb rule. All right, let's do one more example. In the year 23-24, Rahul stayed in India for 183 days. On 1st August 24, he is going to USA for employment outside India. on 1st August 2024, he is going to USA for employment outside India. So how are you going to write down the answer? Till 1st August 2024, please write down. I know you all know the answers. I can see the chat box and my eyes are twinkling with excitement when I see all these correct answers. So applauds for all of you, but write down these points which I'm telling you. You'll forget otherwise later on. Okay. Then till 1st August 2024, Rahul is PRII because he stayed in India. Very good, Pallavi. Because he stayed in India in the previous year for more than 182 days. But from 1st August 2024, he will fall in the exception. That is going outside India for employment. So he will become PROI, that is person resident outside India, from 1st August 2024. Is that clear, everyone? Now, there is one more twist that we have to do. So, if Mr. B has never stayed in India, Anil Army is asking me to repeat. So, what do you want me to repeat? You will have to tell me because I also forget because I give you different kind of dates, whatever is coming in my mind. I think it was something from 1st August 2024. He will be considered as PROI, person resident outside India, because he falls in the exception. All right, clear, Anil Army? Okay. So if Mr. B has never stayed in India and he comes to India on 1st July 2024 for doing business, what will be his residential status for 23-24 and from 1st July 24? Both the things you have to tell. So 23-24, he has never stayed in India previous year. So he was a PROI. Now he has come to India to do the business. He will be a PRII. Very good, very good. Hardik, Mahi, Anil, Pallavi, everyone. Kasak, very good. So pehle wala PROI and fir us date se PRI. Excellent. Now, the only thing that you have to remember over here is that is the RBI clarification that has been given. So if I ask you that if any child is going outside India, you're going to Canada for higher studies, what do you become? You are a PRI. Higher studies are not covered over here. So you still remain a PRI. But RBI has given a clarification that when children from here go abroad, they have to do certain kind of work over there to pay for their living expenses. You must have seen your friends who have gone for studying. Either they are frying the burgers at McDonald's or any kind of job they try to take up as a student just to have good living over there, because everybody works, in foreign countries. If you'll see, everybody is passionate to work. Don't sit idle. So if they are working and studying for half a day, for another half of the day, they will be working, they will be earning money. So RBI has clarified that whosoever goes abroad, they're going to study and they're going to do employment there only. So from the study visa only, we have decided they will become PROI because we assume that they have gone outside India for employment. So RBI has given the clarification that any child going for studying abroad, it is considered to be part of employment outside India only. So therefore, they are considered to be the person resident outside India. ठीक है, आपकी स्टडी में लिखा भी हुआ है. अभी I will just mark it from the study also. But the understanding, I hope, is clear to everyone. Let's move ahead to another point now. Any person or body corporate registered or incorporated in India. Reliance, if it is formed under Companies Act and it is registered in India, what is it? PRI or PROI? Any HUF, artificial judicial person incorporated in India, it is a PRII. Absolutely correct. Any office, branch, agency in India owned or controlled by a person resident outside India. So you are a resident of USA and you come and open up any branch office in India. So where is the company? Company is in India. So it becomes a, tell me, you have to tell me the status. What will it become? PRI, absolutely correct. If you have an office in USA, which is being controlled by, in the first example, which we did, by Mohan in India. So Mr. Mohan in India is controlling the USA office. So Mohan has set up a company in India and it is having a branch office outside India. Since it is being controlled by a person resident in India, that branch office which is outside India will also become the person resident in India. So you can simply write down the examples. If any Mohan opens branch office in USA, it's PRI. John from USA opens office in India, it's PRI. Company, branch, or office incorporated by Indian in India is always a PRI. Means if outsider come and opens a business in India, then also PRI. If we have opened a branch or company in India, then also PRI. If we have opened a branch or office outside India, we are an Indian, we are the person resident in India, I am controlling it, then also it is a PRI. Clear, everyone? So somebody was asking me the definition of PROI. So person resident outside India means a person who is not resident in India. So they have simply told you that there is only one line for this definition. Person who is not a PRII, he is a PR. So PROI have to be understood. PROI have to be understood only from the definition of PRI. Okay, good. Mahi says 100% conceptually clear. That's great. So PRI definition only has the hidden meanings of PROI. Okay. So this is the chart which helps you to understand the residential status. So PROI means a person who is not a resident. So what it becomes relevant to understand what is PRI. During the relevant previous year, if you have resided in India for more than 182 days, then yes, ma'am, we become a PRI. Absolutely correct. So let's see this flow chart. Okay, children, for this chapter, FEMA flow charts and diagrams are very important for your notes and understanding. There you have to write. That's why I'm making you write down things and the answers, because what happened in the exam, you remember it's a PRI, but you don't know how to express your answers. That's why we have, whatever I have made you write it down, figure out the notes later on, because writing is very, very important in the exam, where generally the marks get deducted. Okay. So during the previous year, he resided in India for more than 182 days. Yes, ma'am, he becomes a PR. Did he go outside India for the current year? If no, then he remains a PRI. If yes, he has gone out of India, and yes, for these three purposes, then he becomes a PR. Did he go and stay outside India during the current year? Yes, but if he has not gone for these three purposes, or he has not gone outside India only, then he remains a PRI. So this is what we have done in this definition. If for three purposes you're going, you become PROI. Not those three purposes, not going and carry forward the status. Then you have to see the previous. Similarly, over here, if he has not stayed in India, means he's coming to India for the very first time. Then for the three purposes, if he's coming, then he becomes a PRII. Not for these three purposes, then the carry forward status, that is 192 days not there, so PROI. If he has not come to India, anyways, he remains a PROI. So this chart is basically to complicate the things more, but if you have understood in the previous slide, then it will become very easy for you to understand. Now, section 3 says dealing in foreign exchange. So I told you, no person shall deal, transfer the foreign exchange of foreign security. Only it can be done through an authorized person. They can only make the payment to the credit of the person who is a resident outside India. Now, what is the meaning of this line? It says any person, if you have purchased the machinery and you want to make the payment, you have to get the dollars exchange from the SBI money changer. Only these people can allow you the exchange of money. You cannot directly make the payment. Say, for example, you have your relative who's staying in London and you want to send them money, you want to send them rupees, or you want to get the exchange from them that, okay, please send me $50,000 or $1 lakh. Then your relative can send you directly. Then it is illegal. They cannot send you directly. They can only do that through an authorized person, that is a banker, money changer, or dealer. Okay. That is your first point. And then it says any payments or the credit of any person. So if you are a PROI and any payment has to be made, for example, your family or somebody is residing outside India and they have certain insurance policies which they have taken up, the premium needs to be paid. So now if you say that you pay the premium directly in dollars only, then that cannot be done. You have to get the money exchanged and only then the payment can be made. So any credit payments that you have to make for the person who's a resident outside India. So your family member, they have gone and settled outside India, no more than 182 days you are meeting. That means they have become PROI. Now, if they want to make any premium payment, insurance premium payment, examples are given in your study material. I will show you from there also. Then for that, foreign exchange has to be taken from the authorized person. They directly cannot make the payment. After that, it talks about giving any gifts. Say, for example, your uncle has given you $100 or $1 lakh as gift. Then they can do those gifting only through the authorized dealers. They cannot directly send you the money. Okay. Even you cannot take any assets outside India. For example, you say that kind of hawala transactions you're doing, you're telling the person in US that purchase certain property from me and buy it outside India. I will give you 1 crore in India. So you buy a house for me, $100 lakh you pay over there. I will pay 1 crore and I will purchase the property for you. That is a kind of hawala transactions. That is, you are buying the land for me in your country. I am buying the similar price land for you in my country, and we have the land owned in our names. So this is also not allowed. These kind of transactions are not allowed. You have to deal in the foreign exchange. You cannot acquire the land outside India by any person. You cannot enter into the financial transactions on your own. You have to have the involvement of the authorized person. Okay, you want me to take up the examples? I can show you these examples in the study also. Or you will go through on your own. Speak. This is done. Now, this is only for reading. All this first limb, second limb, you can give it a fair reading. Again, these examples, I have already done these examples in my own language with all of you. You can just give it a simple reading. But reading is important because then only it will become more clear to you. Okay, this is all the branch office control. So institute has made so much effort for all of you. They have just tried to simplify each and everything so that even if the child is sitting and trying to study on by itself, they will understand when they give it a fair reading. Okay. So illustration 1 is your homework. You will do it today after studying illustration 2 also. Illustration 3, I will do with you. Even Alia wali illustration, yes, this also I will do with you. But let me first complete this section 3 and 4. Yes, this is your section 3. That is any payment that you're making or receiving any payment through authorized person and entering into financial transactions is not allowed. So examples for dealing in foreign exchange, I was telling you a PRO comes to India and he wants to sell US $1,000 to his friend. So this friend offers him a rate better than the banks. This cannot be done because you cannot say that, okay, bank is selling it for 60 rupees. No, Anil Army, we have the class on 3rd February also. Why you worried? We have 2 sessions for FEMA. So today we'll try to complete as much as possible. And then on 3rd February, we'll be completing the entire chapter. Okay. All right. So here we will be dealing in the foreign exchange. So this is not allowed. Second is insurance policy. He requests his brother to pay the insurance premium. He's saying that I am although a non-resident, so I will send you the credit of the money, and this is not allowed. You have to do these kind of dealings through authorized person. Then a foreign tourist who comes and eats the food at a restaurant. Now he has had a food in the restaurant, so I don't know which place you're staying. So let's assume Novotel, it's a international chain. So he's having food over there, and in India he's eating food at Novotel. He says, I want to pay in US $20 in cash. The restaurant cannot accept it because it is only the authorized person. He will take money, change his license to accept the foreign currency. So certain certain restaurants do have these license also, then only you can accept. Otherwise, you have to deal in your same currency. You cannot go to Singapore and you can tell them that I only have rupees, please accept my rupees. They will not accept it. You have to get your currency exchanged. That's why these money changers are sitting at the airports and you have offshore banking units, because you cannot use your currency in another country currency. Okay, then this Indian resident gives 70,000 cash to Indian dealer and he buys, the brother is buying the US $1,000 from the Dubai dealer. These are the settling transactions later. This is not permitted because this is known as Hawala transactions. So this kind of examples are also not covered under FEMA. You have to take the permission of the authorized dealer. And section 4 simply tells you that no person who is a resident in India will acquire, hold, or possess the foreign exchange, foreign security, or any property outside India. But you will say, ma'am, right now you just told us in capital account transactions, yes, we can own a house in Dubai or we can buy any property or any liability. Now you're saying that we cannot deal. So it says, except as provided in this act. So if you are doing as per the provisions of this act, then everything is fine. But otherwise, if you try to hold the foreign exchange or foreign security, then you're not allowed. So this section prevents the Indian residents to acquire, hold, possess, or transfer any foreign exchange, foreign security, or immovable property. However, through notifications, transactions have been permitted subject to the conditions and compliance. For example, if an Indian resident receives a bank balance of US $10,000 from his uncle in London, he cannot hold this foreign funds. He's supposed to bring back the funds as given under Section 8. So Section 8 we will be doing when we discuss about the capital account transactions. But if your uncle in abroad is giving you this kind of money, you cannot hold it in the foreign funds. You have to get that money back in your Indian account. Okay. Is that clear? Because I want to do 1 or 2 schedules with you, all of you today. Do you want to do that illustration of Miss Alia, or you will manage? We can move ahead. Please tell me, you want to do those illustrations? This illustration, because it's little complicated, otherwise you'll understand, even this toy limited. You will manage these illustrations. Can we move ahead, children? Please tell me. Illustration 3 and 4, just give it a fair reading. If you have any doubts, you can ask. Yes, Nanda Goyal, you cannot purchase any asset outside India, but you can do that only as per the provisions of this act. So Section 8 will tell you how the capital account transactions will have to be dealt with. Okay, so I think illustration 3 and 4 are very simple. You can just give them a fair reading. Answers have been given over here. If you have any doubts, you can ask me, okay? So let's move ahead, children. Current account transactions. So again, it is giving you the definition, which we have already done. So example number 3, it says Indian resident imports machinery from the vendor in UK for installing in his factory. So machinery, although it's a capital expenditure, but I told you that under FEMA, if you're not creating any asset for the UK vendor, you're not creating any liability, then it will amount to a capital account transaction because you're getting that machinery. Oh my God, Tambeshwari is going on moon to buy the property. Child, when you go on the moon and you buy the property, then you ask me what currency you're going to use, okay? As of now, we're not buying any house. All right. It might happen soon. You never know. Okay. So this is a current account transaction example 3. Everyone is clear about that? Example 4. Indian resident imports machinery. So these are again simple. We have done these. Period of 3 months is telling you short-term credit, so it is allowed. And if you are giving any gift, so again, I told you for the gifts that you're getting will not be amount to capital account transaction. Only if you're getting any outsider is giving you Indian cash rupees over here. Or say, for example, your sister is married in UK and they are UK residents only. And when they come over here, you give them a cash over here, then they have to get it converted. Otherwise, it will be said that the person resident outside India and cash and asset has been created in their hands over here. So then that will be a capital account transactions. So if say PRI gives PROI gift in Indian currency, then it will be the resulting the funds lying in India. Alteration has happened of the Indian asset. Therefore, although no creation of the asset of PRI, but for PROI, it is a capital account transaction because you've got cash over here. Okay. So central government in consultation with RBI impose reasonable restrictions on current account transactions. It says current account you can draw and sell foreign exchange for the current account transactions. So you want to give gifts, you want to buy house outside, you want to buy machinery and you want to import it inside India, you want to pay interest and loan. All these current account transactions, you want to send medical expenditures for your parents abroad, you want to do a foreign travel, you want to have a trip to France, Italy, Japan, you can do all these current account transactions, but central government has imposed certain restrictions. There are three schedules, out of which at least one or two schedule I'm going to discuss with you today in the class. That is the major part from which the question comes. So this chapter has three basic things out of which question come. Number one is your residential status, which we have discussed in detail. But before that, those definitions were very important. Foreign exchange, foreign security, authorized person. From that also question can come. Then the question come from these schedules that we'll be doing half of them today and half of the chapter in the next class, that is on 3rd February. Okay, so central government can impose reasonable restrictions on these current account transactions. So it is divided into three different schedules that they have given. The rules have been laid down in three different schedules. Schedule 1 will tell you the transactions which are strictly prohibited. Means where it is written the person can sell and draw foreign exchange. What is the meaning of this line? Can you explain me? What do you mean by sell or draw foreign exchange? What is the meaning of this line? You can sell or draw foreign exchange. It is your turn to speak now. Yes? Means you can get the money exchange from the authorized person. Sell or draw foreign exchange means you can get the currency converted. For certain transactions, it is strictly prohibited. Can you use the foreign exchange? Draw means bill of exchange. No. You can buy and sell through authorized person. Yes, Hardik, absolutely correct. So you have 10,000 rupees. You want to make the payment for $100. How will you give 10,000 rupees for dollars? You will have to go to the authorized person, get it converted into dollars, and then make the payment. So this is known as selling and drawing foreign exchange. This has to be done for current account transactions only through an authorized person. But central government impose certain restrictions after consulting RBI. RBI is not imposing restriction. Central government, Sarkar impose kar rahi hai restriction that you cannot take our money outside India without our permission. You cannot just pick up your foreign exchange and travel abroad. You cannot take the currencies. You have, there's certain schedules, certain situations in which you have to take the permission of government departments, certain transactions which are strictly prohibited. So foreign exchange is strictly prohibited for Schedule 1 transactions. Schedule 2 are the transactions where the approval of the government has to be taken. And Schedule 3 has the transaction where RBI's approval is required. Without RBI's approval, you cannot use the foreign exchange. So please write down in your notes. For current account transactions, we will be doing as three schedules, because everything should become simple for you. Schedule 1, transactions prohibited means transactions for which Forex is not allowed. Schedule 2, whose approval is required? Transactions for which Government of India, different departments, you will learn different departments over here. HRD departments, ship industry departments, approval is required. And what is Schedule 3? transactions for which RBI's approval is required. Please write down this in your notes, because when we have done these transactions, you will never forget what were the transaction CG approval. Sanya, that's what I told you. He has to do it through the authorized person. So if you want to give a gift, so PRI can give to PROI, no? You're giving money. Your cousin has come to your house. She's in resident outside India. You have given them 10,000 rupees. So law says when they have the outside person has got the 10,000 rupees, that means asset is created in India. So it is a capital account transaction. Okay. Now they have to go to the authorized person to get it converted when they want to take it abroad. Okay. Yes, Anil Army, the person who has invested in foreign market can buy and sell. That's correct. Is that clear, everyone? So the 3 schedules are done. It's over. Or you want me to do this 3 schedules with you? Okay. So you have written down the headings for 3 schedules. Let's start with the first schedule, where how the transactions are. Which are the transactions which are prohibited? Number 1, remittance out of lottery winnings. So law says if any foreigner has come to India and he has won money from the lottery tickets. So John came to India and he has purchased many lottery tickets, and out of his luck, he has won all this money, 1 crore rupees in India he has won. Now he's going back to USA. Can he take this 1 crore rupees back to USA? Law says no, this transaction is prohibited. Whatever lottery winnings you have received over here, you have to spend that money in India only. We will not allow you to draw the foreign exchange and take it outside India. Similarly, if any outsider comes and spends money on racing and riding, or you, the person resident in India, want to take dollars, you went to RBI and you said SBI Bank, and you said, I need dollars, I want to buy lottery tickets abroad, or I want to spend money on racing and riding or any other hobby abroad, you will not get the foreign exchange for these purposes. Or you say that you want to purchase the lottery tickets or any kind of banned magazines. Banned magazines means the magazines which are banned over here in India, and you still want to buy them from abroad. Or you want to do the gambling, football pools. What is the meaning of football pools? Football pools means you do a certain kind of gambling for the footballs, like you have here in for cricket, you do bettings for the cricket, who is going to win. In outside country, you do the football pools. You give money for the betting of the certain football matches. Or sweepstakes is also kind of online gambling or betting kind of things that you do. For all these kind of things, government is not going to give you any kind of foreign exchange. So how will the examiner ask you a question? There will be a question. Mr. John took the money for racing and riding or any other hobby. He went to the authorized person to take the $300 as a foreign exchange. Is it allowed? So you will say this transaction falls under the purview of Schedule 1, given for the current account transaction. It is strictly prohibited. Therefore, he will not get any kind of foreign exchange for these kind of transactions. Okay. First 3 points, everyone clear? For lottery winnings or for racing and riding, football pools, sweepstakes, all these kind of money is strictly prohibited. No foreign exchange is allowed for these kind of transactions. Then the fourth transaction is a little complicated, which you have to understand with me. Payment of commission on exports made towards equity investment in jointly owned or wholly owned subsidiary companies of Indian companies. So you have an Indian company, ABC Limited, and this ABC Limited has a wholly owned subsidiary or a joint venture in USA. So how do you have a wholly owned subsidiary in USA? You will have to invest money. 50% of the shareholding is in your hand. Then only it becomes a wholly owned subsidiary. So this ABC Limited, instead of investing in cash, has invested in the equity investment. Equity investment means Nanda Goyal is asking something. I am a resident. I won lottery. Can I take it to the foreign? No, you cannot take it to the foreign. That is what it's saying. Winning of the lottery monies, that money cannot be taken to abroad. If you are a resident and you are only winning money in India and Indian rupees, then there won't be any foreign exchange. Okay. If you want to buy the tickets abroad or any foreigner has come and won the money over here, then there will be a restriction. You are the resident, you are winning the money. How do I know that rupees money is your lottery money or something that you are winning from your business or something? All right. So then there won't be any problem. Foreign exchange has to be more. For foreign exchange, drawal is not allowed for those kind of things. All right. Okay. Remittance of commission, payment of commission. So I was telling you there is a company ABC Limited. They have wholly owned subsidiary company in USA, that is PQR Limited. Now, for investing in PQR Limited, ABC Limited has given certain goods to them. They have sent certain export of the goods, equity investment they have done in them. So whenever we do exports outside India, we generally have an agent who is going to sell the goods, and we have to pay commission to such kind of agents. So I export my goods to USA, that person will be selling the goods and he will be either giving the money to me, but instead of giving the money to me, I told them invest that money in my company only. So either I ask the agent to sell the goods and invest that money in my company, which is wholly owned subsidiary, or I'm sending the goods only directly to this company as an equity investment. So government says when you are exporting the goods to your own wholly owned subsidiary or joint venture, then you're doing an equity investment. Because it is your own subsidiary of Indian company, you don't need to pay any commission on such exports. So if I try to pay dollars on such kind of exports, the agent says that you have to pay me commission. That is prohibited. So any exports that you have made outside abroad as an equity investment to your wholly owned subsidiary company, for that, if you try to pay commission, that is prohibited. All right. Let's take a small break and then we will be completing these 4 points because each and every point has a story to be explained in detail. So we will be doing it in detail. Okay, Anil Army wants me to explain the 4th point once again. Yes. So listen everyone, there is a company ABC Limited in India. It has a subsidiary in USA with the name of PQR Limited. All right. Everybody's clear till there? Indian company send goods as export goods to this company. Okay, not send, export goods to this company to make an equity investment. So either you invest in cash in your company or you are giving capital goods, right? Capital investment, capital is in the form of goods to make an equity investment in these goods, in this company. Now, examiner will ask you, can I pay commission on such exports? Yes or no? Tell me. Am I allowed to give commission on such exports? The simple answer is no. Foreign exchange will not be allowed to pay commission on such exports. No foreign exchange can be used for paying commission on such exports. Is that clear, everyone? Yes, Tameshwari wants to ask something. Yes, Tameshwari, please speak.
Ma'am, I confusing the current capital और current वाले के अंदर मैम मेरे को confusion हो रहा है.
You want me to explain you in Hindi?
Yes, ma'am. But ma'am, I also understand that capital for a balance sheet and current for a P&L. But ma'am, आपने
Accounting
बोला
concepts will not work here, dear. Accounting FEMA is totally different. So what you have learned in accounts and income tax, you have to forget. Then only you'll understand FEMA. So I will explain you. मैं हिंदी में बता देती हूँ आपको. अगर आपका कोई कैपिटल एसेट बाहर क्रिएट हो रहा है तो अकाउंटिंग के साथ इसलिए हम समझते हैं क्योंकि हम अकाउंटिंग में एसेट एंड लायबिलिटी को समझते हैं. बट वो पूरा कॉन्सेप्ट आप यहाँ नहीं ला सकते क्योंकि जैसे ही मैंने बोला मशीनरी आपने बाहर खरीदी और आप इंडिया में ले आए तो वो करंट अकाउंट ट्रांजेक्शन बन गया. क्यों? क्योंकि बाहर कोई एसेट नहीं क्रिएट हुआ. जब आपका बाहर कोई एसेट क्रिएट हो रहा है, आपने दुबई में घर खरीदा, कैपिटल अकाउंट ट्रांजेक्शन. आपने पेमेंट अभी करी नहीं है, पेमेंट करनी है, बाहर कोई उधार है, लायबिलिटी क्रिएटेड इंक्लूडिंग कंटिंजेंट लायबिलिटी बिकॉज यू आर अ पीआर. कैपिटल एसेट क्रिएटेड. यू आर मिस्टर जॉन ऑफ यूएसए. आपने आकर चंडीगढ़ में घर खरीद लिया, कैपिटल अकाउंट ट्रांजेक्शन फॉर दैट पीआरओआई. आपको कैश मिल गया, कैश इज ऑल्सो कैपिटल एसेट, कैपिटल अकाउंट ट्रांजेक्शन. ओके, डोंट से दैट इट इज अ करंट एसेट. Okay, don't go into accounts. Just understand asset or liability created outside India, capital account, inside India, capital account. And the Meshwari capital account transactions in section 5 and 6 in detail we are going to do. We still have lots to discuss about that. So again, you will get a clarity.
Okay, ma'am.
Understood?
Yes, ma'am.
All right. I think let's take a small break over here, children, because we have started schedules also, and you need to go through illustrations also. Let's take a small break over here and then we'll continue. (3.18) if, however, the PRI and in similar manner. Okay, Nanda Goyal is asking a doubt on page number 3.18. Let me read out the doubt once again. If, however, the PRI in similar manner. So, in which example are you having a doubt, Nanda Goyal? Are you asking example number 4 or 5, child? Please clarify. Yes. You want to speak, Nanda Goyal? Should I unmute you? All right. So here it simply tells you that central government is going to impose restrictions. And here it is simply trying to tell you that if PRI gives a gift, I just explained this point to Tambeshwari also some time back, that if you're giving a gift to a person who has come to your house, he's a PROI, then if you're giving them cash, asset is created in their hand, it will be a capital account transaction. But if PROI is giving a gift to PRI, so if your uncle is giving a gift to you by remitting funds in India, then there is no restriction. But if they're giving you money abroad, then you cannot keep it to abroad. You have to bring that money to India. That is something which is very, very important. All right. Yes, Hardik, you want to speak something?
Good evening, ma'am.
Good
Ma'am,
evening.
ma'am, I have a small doubt. Ma'am, if
Mhm.
a person residing outside India comes to India and incorporates a company within India, then ma'am,
Mhm.
it is also PRII.
Yes, then it will also be considered as a PRI because the person, although from outside India, but he has incorporated a company in India, it will also be considered as a PRI.
And ma'am,
Okay.
second one is that if a person residing outside India is having a massive business and he is having a different branches in India and as well as in other countries. So, ma'am, the Indian branches, even though they belong to that foreign company, then also it will be a PRI.
Come again, Hardik. There was
Ma'am,
little
ma'am,
gap in between.
if there is a business, massive business of a company who
If
has
you are you talking about a PRI or about a PROI?
PRI.
Okay.
Ma'am, if a company is having a massive business and it is having place of business in India and it
Hmm.
is wholly controlled outside India,
All right.
then
If it
also,
is
ma'am,
being controlled outside India, but you have incorporated it in India, then it will fall in the second last head. That the branch office controlled by in India by a person outside India.
then also PRI.
Yes. Yes.
Ma'am, that foreign company rule will not apply, like place of business one.
No, 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 no. You don't have to apply income tax or foreign companies or any other act when you're talking about FEMA. Okay, just refer to that definition of PRI. Okay, I'll just show you. If you'll just simply see this PRI definition, even Nanda Goyal, your doubt will get clear that you have written about the US person. So when you read this definition, it clearly tells you that any branch office, this is you're talking about. So you have set up the branch office in India, but it is being controlled by Mr. John who is sitting in USA. So it is PRI. Okay,
Okay,
you
ma'am.
don't have to see the place of business. That is a foreign company. That is different story. And you setting up in branch office in Singapore being controlled by you, who is a person resident in India, then also it's PRI.
So, ma'am, foreign company and FEMA are two separate heads.
Definitely.
Okay.
LLP, foreign companies, FEMA, these three different acts, then you'll be getting 10 marks question jointly from interpretation and general clauses. So 40 marks tables from here and 60 marks is your company's act. It's totally different.
Okay, ma'am.
All right. Good.
Okay, ma'am. Thank you, ma'am.
All right, no problem. Thank you. Yes, Anil Army also wants to ask a doubt. That means you'll not let me complete schedule one, huh? If you'll keep asking doubts. Yes, Anil. Yes, Anil, speak.
Ma'am, if a person is holding shares in abroad, and he's completely all right with FEMA residential status as he's
Yes, if
satisfied
you're holding shares
person.
abroad, if you're holding shares abroad, suppose $100 you have invested in a company which is listed in US and you get dividend in dollars, foreign security is involved. Yes, FEMA will be applicable.
Ma'am, I'm just asking about a residential status, ma'am. Whether he is classified as a resident, person resident outside India or person resident in India.
So here we don't have to see that FEMA is applicable if you are a person resident in India. We simply tries to tell you that if you're a person resident outside India, so you remember under Indian Contract Act, we have referred that we don't do contract with the persons who are resident outside India, alien enemies wala jo, person who is not a resident in India. So for that particular things, you have to see the residential status. Here, they are not going to ask you the questions related to whether you can do the contract with them or he will be considered as a PRI, how you have to calculate, because you're not calculating any revenue or income tax for them. That is for simply understanding how your residential status will be determined, whether you're a PRI or you're a PR. But if you're having a foreign security where you're getting a return, that will come under the preview of foreign security. It has nothing to do whether you're a PRI or a PR. Okay. Is that clear? How come I am on mute? All right, just give me 2 minutes, students. Just yes, students, am I audible now? All right. Nanda Goyal is asking, ma'am, clarification on the education concept. A person gone to USA for education. So if you have gone to USA for education, it will be clarified. It has been clarified by RBI that yes, you will be considered as a PROI because it is assumed that if you're going abroad for studies, you will be definitely doing some work also to take care of your living expenses over there. So that's why you will be considered as a PROI. Yes, Ritika Gupta, you have a doubt. See, I was asking you that time for the illustrations. You all of you said, no, ma'am, we'll do it by ourselves. And now everybody is having a doubt related to that gifts point. But I will first complete schedule 1 points and then I will come back to that. So schedule 1, 4 points we have done. The fifth point talks about the remittance of dividend. So it simply tries to tell you that the place where the dividend balancing is applicable, there if your remittance means to pay back. What is the meaning of remittance? To pay back. So there is an Indian company which has invested in a company in USA, and now since they have invested in the company, this USA company has taken certain shares in the Indian company. So Indian company needs to pay them the dividend on those shares. At the same time, they also export the goods for which the USA company needs to make them the payment for that export. So dividend balancing is nowadays not applicable, but it is talking about the days when this dividend balancing is applicable, means you're doing the knocking of the entry. I have to pay you the dividend and you have to give me the amount for the exports. So neither I will give you the dividend nor you pay me the exports. So I have to give you 100 rupees, you have to give me 100 rupees. So we have just knocked off the entries. We are not giving any money to any one of us. So that is the prohibition which was imposed by the government, that you will not remit the dividend if the dividend balancing is applicable to your company. Although now this dividend balancing is not applicable. Yes, like setting off. Absolutely correct. So if you're now not setting off, if you are a company on which dividend balancing is applicable, then you cannot remit the dividend to an outside company. You cannot pay the dividend. After that, there is a payment of commission on exports. Now, there are 2 points how you have to learn it. Point number 4 and 6, both are related to the exports. What was point number 4? If you have a wholly owned subsidiary or joint venture abroad, you are giving them the equity investment goods. On that export, you cannot pay the commission. Point number 6 says, again, you are sending the goods under exports under the rupee state credit route. Now, this is a route that you have to learn. There is a term known as rupee state credit route, which means whenever I'm going to export the goods to any other country, I will get rupees only in return. I'm not getting dollars, I'm not getting yen, I'm not getting pounds. Say, for example, I did certain contract with Russia and I imported goods from them and I paid them cash in money. I paid them in cash. Now they have a lot of cash with them. So when I export the goods to them, they have accumulated my foreign currency. Cash has been kept. So under rupee state credit. So rupee has been kept with them. Now they pay me back also in rupees. So if such kind of transaction where we are using rupee state credit route means this, that I have already on my imports, I have paid rupees to them. And when I export the goods, they also pay me back in rupees. My currency is only being used. So here, since we are doing our own Indian currency is being used, so prohibition on the commission. You cannot pay dollars on such exports. Okay. You are again prohibited to pay commission on such kind of exports. But the only exception is in the case of tea and tobacco. Now, tea and tobacco are something which are very, very in abundance use in India. So if you're exporting tea or tobacco, there on the invoice value, maximum up to 10% of the commission can be paid. So if ABC company in India is sending by export tea or tobacco export they're doing, and there is an agent who is going to sell in USA those exports, to that agent, if they want to pay commission, up till 10% of the invoice value, commission can be paid. So this is the exception which has been given under point number 6. So point number 6 clarifies that no commission will be given for the exports which are done under rupee state credit route. What is rupee state credit route? I paid you rupees, you also give me rupees. We are not using any foreign currency, so no payment of dollars in foreign currency. No payment of commission in foreign currency. But the only exception is where I'm exporting tea and tobacco, there 10% of the invoice value I can pay as commission. Payment related to callback services. Now, this is also redundant. This is no longer used. Callback services means earlier we used to give a missed call to the international number and they give us a call back. And on that call, we had to pay the charges in dollars. So, for example, for 1 minute call, $0.10, 10 cents or $1, something like that was charged. So if such kind of charges you have to pay, then also that is prohibited. Forex cannot be used for callback services. You're paying in cash, you do whatever you want to do, but we will not give you dollars or yens or pounds for paying back on this callback services. And the last point is remittance of interest income on non-resident special rupee scheme account. This is very, very simple and very interesting. So say, for example, Mr. John has come to study in India. He has taken admission in Punjab University in Chandigarh. Okay. He's Mr. John from USA. He has come to study in India. So since he has come to study in India, generally we people go and study in abroad in Oxford University or in Canada, but this Mr. John wants to study in India. From USA, he's studying over here in India. And when he's studying in India, he has opened up a bank account with Axis Bank. What kind of bank account he has opened up? Non-resident special rupee account. So his parents have sent certain funds, certain money to him, and that has been set up in non-resident special rupee account. He stays and studies in India for 3 years. Now, while he is going back to his hometown in USA, he has stayed in India. He comes to know that in our Indian bank accounts, we get certain interest on saving accounts and FDs. We also get certain kind of interest income. So he said, give me also this interest income. I was having balance in your bank in non-resident special rupee scheme. So law says if you are a non-resident, you have come to stay over here in our country and you have this non-resident special rupee scheme account in our bank, you will not be given any interest income on such kind of savings. Prohibition has been imposed. You will not get, you cannot take any, you are not doing any business over here. For what we are giving you any kind of interest income? It was your money, you're taking your money. You cannot earn smartly interest income just because your money has been kept in our bank account. So if any non-resident is having his money in our bank over here as the account of non-resident special rupee scheme account, then no interest will be given on that. So lottery winning, horse racing, football sweepstakes, lottery tickets, all these kind of 3 points you have to club and learn. Prohibition on foreign exchange. 4th and 6th you will learn exports के ऊपर commission नहीं pay करते, चाहे वो equity investments है or it is under the rupee state credit rule. Only exception is 10% of the invoice value for tea and coffee, tea and tobacco is allowed. 5th point, dividend balancing is applicable. You will not remit the dividend. 7th point, callback services, prohibition. 8th point, if you're having the money in non-resident special rupee scheme account. Tell me, can you pay the interest on this? Yes, ma'am, or no, ma'am? All tired now, huh? Can we pay the interest income? So no, ma'am, is the correct answer. Good. Everybody has given the correct answer. So yes, Ankit, then also FEMA will be applicable. Sanya, yes, there are many cases where you'll not have to refer income tax when you're doing FEMA because it will get confused. Anil Army dividend balancing is not no longer applicable. It simply tries to tell you that Anil, you have a company and I have a company. You have invested in my company, so I need to pay you dividend. But I send you certain exports, you have to pay me the money for those exports. And we try to knock off the entry. I will not give you the dividend. You also don't pay me the money. So setting off the entries. So this kind of dividend payments will not be allowed where dividend balancing scheme is applicable. All right. So the homework for all of you is please revise whatever we have done today. And my humble request, please go through each and every page of study material. We have completed till schedule 1. We have still lots and lots of to do. And I have certain number of questions for also all of you to understand. So please come prepared. We'll be completing the chapter. Plus I'll be taking your test on 3rd February. So thank you very much. I hope you all enjoyed the session. And see you all on 3rd February. Just a second, sir. Thank you so much. Thank you, Ankit Mishra. Can't do it. B. Sai Kiran, you remind me of the next time. What is these avoidance rules that you have talked about? All right. Thank you so much, Anil Army. I'm glad your confidence has increased. That's nice. That's wonderful. Good. All right. Thank you, children. And I see you all on 3rd of February now. I was just seeing if any doubts are there, and all the doubts have been clear. Yes, Hardik, you want to speak something?
Ma'am, I have a small doubt in like foreign company. Can I ask? Small doubt.
Okay, just write down in the chat box. I will take a picture and then in the next class we can discuss.
Okay, ma'am. Okay.
Or you can tell me the page number. I will just check it out and discuss with you. All right. Okay, thank you so much, students. Thank you, Abhishek Agarwal. I have read what all you have written. Thank you so much, Nanda Goel, Tambeshwari, Kasak, all of you, Ankit Mishra, and see you on Monday, 3rd of February. Good night. And please remind me of your foreign company doubt, Hardik, on Monday, okay? Thank you. Okay, let me take the picture of this. Subsidiary of a foreign company which is incorporated in India. Subsidiary of foreign company will also be assumed to be foreign company. I will explain you this point in the next class. Thank you.